Devang, hi, afternoon. What is it that you're making of the weakness that one is seeing in the large private banking names? I mean, everything from an HDFC Bank, minus, of course, today's recovery, to Axis and ICICI Bank. Are these dips to be bought?
Thanks for having me on the show, Aisha. I think certainly yes. This is an opportunity which I think a lot of people have been sort of waiting for. We saw a good rally in the PSU banks. Earlier, private banks also led the entire stable, as well as certain NBFCs also came to the fore. I think this correction and consolidation that we are seeing actually augurs very well for the health of the markets. As such, it can't be a one-way ride, and there has to be certain gravity to the proceedings. And that's what I think the US bond yields, the longer for higher interest rates, inflation, all this right now are sort of acting as a deterrence for the up move in the market. And I think this correction, which is right now going on in our markets, probably gives a lot of people who sort of had missed out the bus an opportunity. And more so, the question on the private banks, I think it's been more or less a market of sector rotation. There has been so much of sector rotation. You see suddenly FMCG stocks come to the fore, discretionary consumption stocks doing well. Someday pharmaceuticals also probably coming back. So most of this, I don't read much into it. As such, the market breadth has not been extremely negative. That's one heart that I can take out from this phase of the market.
That's some silver lining that you're watching out for, Devang. But fisheries?
Yeah, I think it is very clear. We are seeing that the discretionary side of the consumption has also gone up. This is quite evident from the auto car numbers, the passenger car numbers particularly, which we saw for September. Yes, I think probably what is going to happen over the next 40-45 days during the period of is that there are a lot of companies which will benefit. Of course, you talked about certain QSR, you talked about gaming companies, but I think again there's also a problem which is emanated for the gaming companies as well. QSRs would surely benefit. Travel and tourism, hotel stocks are surely going to see, but this more or less this has been factored in. Airlines, I'm told the prices are anywhere in excess of around 80-90%, and hotels have been booked 100 to 150% up as well. So most of the venues, in fact, something like Dharamshala is completely sold out. It's already a tourism hub, but travel and tourism will get a big boost during these days. Even the festive season falls in November, December. So I think October, November, December is when you see Dussehra, when you see Diwali, when you see the wedding season coming, as well as this time again to sort of be a cherry on the cake. It's also the World Cup. So I think a lot of this host allied sectors would benefit. But as I said, more or less the market has factored in these numbers. It would be very interesting to see these numbers in January. The November, December, the numbers which come in January, if yes, people would have estimated it a little lower, I think there would be a large rally which probably could be even seen in that quarter.
Since we're talking about World Cup and the queuing season, which will kickstart next week,
needs to be actually positive for this space. The only worry that I have is after every result season, probably on the result day, there is been a huge volatility, though we don't look out for that 5-7% type of corrections, because in the term 3 years, I think it just negates itself. But the important part is that rather than the numbers, is actually the body language and the commentary of the management, a bit of guidance in how they are looking at the global scheme of things. When we talk about the US yields and we talk about sort of recessionary type of things, as well as generally you get feeds that everything is going fine. We generally want to listen to the how the European as well as the American economy, where the mainstay of their sort of revenues come in, how they are panning out, and how are the other businesses in the BFSI space over there phasing out. So if one gets a little bit of clarity on that, and again, if the stock rises by 5-7%, but people should probably wait in for that results and then get into the bandwagon. I feel the valuation correction has happened. There's also been certain price correction, and there have also been bounce backs. But yes, overall, I think once the result season is over, probably one can take stock on a comparative basis with the TCS, with the Infosys, HCL Tech, which are trading at what valuation, and how the guidance has gone forward. That's important to monitor, according to me.
Sure, that's the take coming in on IT. In the meantime, let's take it across to Sharad, find out what the dealing room, including, of course, JSW, just yesterday. I wanted to understand if there are any buy recommendations there.
No, I shall know as such buy recommendations, but I think the last couple of months there has been a slew of IPOs, and again the IPOs were such that most of them got oversubscribed by a reasonable margin. And I think in the last 4-5 months we have seen some decent listings as well. One good part is there has not been that large IPO, the poster boy, where you normally see the market tanking or correcting after that. So that's one silver lining I can find out, that still decent IPOs are getting subscribed, not so good IPOs are sort of not getting subscribed, and there is no as such a very large IPO which just pulls out the liquidity from the correcting market as such. So that's one positive I read out from this space.
Right. Okay, that's the take coming in on what the primary action, market action has been off late. We've of course talked about, the many IPOs and the kind of subscription that we've had